You're listening to an exclusive MiningMaven podcast interview, which is for information and educational purposes only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Today's interview is with Paul Johnson, who has recently been appointed as a non-executive director of ECR Minerals and is also a co-founder of MiningMaven. This interview was recorded on Wednesday the 9th of May 2012.
We're at Chartered Accountants Hall, which is the home of the Institute of Chartered Accountants, England and Wales. My name's Malcolm Pally, I'm your host today, and I'm here with Paul Johnson, who is co-founder of MiningMaven along with myself. And we've got a very interesting topic to discuss today, haven't we, Paul?
Yes, we have, and something of a role reversal. Normally I get to ask the questions, but this time it's your turn.
Yes, indeed. Yesterday there was an announcement from ECR Minerals that you'd been appointed as a non-executive director. Paul, can I ask you, why did you take this role on?
Okay, well, ECR Minerals is at an interesting point in its development. People will know about the management changes that occurred recently, and that left the board with two directors, and they needed to undertake a board reconstruction and bring in additional resources. Now, we've been following through MiningMaven the story at ECR for some time. As investors, we've been looking at what's been happening within the company for quite a few years, so we know the story very well. And one of the most important things for the business right now is to put in place an effective, broad and diverse board. And I can certainly bring a degree of communications, publicity and investor relations knowledge to the board. I'm a chartered accountant too, a variety of other qualifications that are detailed on the RNS. So I have some understanding of accounts and figures, how to manage costs, and also how to put in place effective strategy and risk management. So I think it's an interesting role for somebody from my background. It's the right time, not just because of the shortage of board members, but also because of the challenges that the company faces, and it's something that I wanted to do.
Your role as a non-executive, would you be considered as an independent non-executive director?
That's a good question, and something that many people misunderstand. In fact, actually, if people type in non-executive director and go to Wikipedia, they'll get a very good analysis of what non-executive directors do, and then you can ask yourself whether lots of the companies you're involved in actually have directors performing those roles. I think you'll find some interesting thoughts in that area. But no, I'm not an independent. I own shares in the company, and by definition that means I can't be classed as independent, and neither do I want to be. I'm a private investor first and foremost, been doing this for 20 years, have about 8.5 or so million shares in ECR, about 1.2% of the company. What that does is, apart from making me non-independent, it means that I am slap bang aligned with the interests of private investors. I am a private investor, effectively. So I believe that what I aspire to with regard to the company and its progress in the future is well aligned with what a lot of investors out there feel and think every day. And that's vital because for a company such as ECR, private investors make up the lion's share of the holding within the company and will, in the future, drive the share price, hopefully, in the right direction.
Thanks, Paul. What difference do you think you'll make to the company?
Oh, well, that's an intriguing question, because, of course, one never really knows exactly what's going to happen in the future. But let me say this, that I haven't taken this role on to sit passively in board meetings drinking lemon and ginger tea and listening to what's going on but not actively participating. It's not my style. I'm going to get as closely involved with what's happening in this business as I can. The chartered accountancy background is the staple of my experience. I have a close understanding of how businesses operate from a general operations and financial perspective, which means that I can assist in that regard. MiningMaven experience that we've been involved in now for a number of years is great from the communications and IR perspective. And in any way, shape or form, where I can help, that's what I'm there to do.
And what is the role of a non-executive director?
Okay, well, in simple terms, the non-executive director, or NED as they're called, is to look at the performance of the business, the general operations, making sure the business is progressing effectively, the strategic side to operations, so an effective strategy and management of the company, risk management within the business, and also make sure the correct people are employed to do various tasks.
What do you actually mean by strategy?
Okay, well, if you look at strategy with regard to ECR Minerals, there's two key elements that I see at the moment. And this, of course, is a moving feast. First of all, board reconstruction. It's absolutely vital that the management drive of the business, the strategic development of the business, is governed by a broad and diverse board. Now, for a small cap exploration and development business, you need people with technical know-how and capability. Obviously, the geological side of operations is an important part. You need good administrators to run the company operations and make sure everything is handled in an effective manner with regard to the public listing. You need exceptional communications, because you've got to get this message out. There's no place for hiding your light under a bushel with regard to small cap explorers. And you need the right technical skills to drive the business forward in the manner that you anticipate it will go. So if you're thinking of building a mine in a gold exploration wrapper, then you need to have the mine engineering experience to move the business forward at the appropriate time. Second element to strategy, if we assume that the board is in place, and as you know from the announcement, other developments are anticipated soon, you have to think about strategic planning. You've got no chance of getting yourself down that value pathway unless you have a clear view as to where you're trying to get to at the end of the road. So the business needs an effective strategic plan, looking at all current and potential other operations and deciding which assets provide the best opportunity for investor value creation, and then putting in place the right steps on that pathway to value to make sure the business makes progress.
And what about the operational side of the business, specifically with regard to cash burn?
Well, cash burn, this is something, again, as a private investor, is close to my heart. There is no way that any exploration firm can make any progress whatsoever without incurring some cash burn. That's the nature of the beast. You're hoping that through the expense of cash in a diligent manner, that you will drive capital value in the projects that you have within the portfolio, yielding a significant return down the road for investors. And that in theory, in sensible markets, and we're not really in a sensible natural resources market at the moment, but in theory, that the markets will recognise that value accretion as you move along the pathway. And I'm very, very keen to make sure that operational costs are only incurred when there is a clear expectation that some benefit to investors can be achieved from that expenditure. So I'm an accountant, that's what I do. I kind of crunch numbers and look at figures and make sure everything seems reasonable. So whilst I expect companies need to burn money, I am, as an investor and an accountant, keen to make sure it's very carefully spent. And that's something that, as a non-executive director, my role definitely covers, and something that my attention will be turned to in the coming days, weeks, months, and so on.
Paul, you've got a background in risk management. How do you intend to apply this specifically with regard to your role at ECR Minerals?
Most organisations, well, no, that's not true. All organisations have to be very careful with their approach to risk management. In the small cap natural resource environment, you are juggling so many different things. You've got markets which are not consistent. They're not the same one month after next. You know, at the moment we have a desperate situation in the markets. From a contrarian perspective, I love it. I think it provides lots of opportunity. But it makes it difficult for organisations to see the value that they've created being articulated through the share prices. It also makes it difficult in some cases for organisations to be as ambitious as they would like to be, because they have to think about funding and financing concerns and careful expenditure of money. So with regard to this particular company in this environment, we have to make sure that the projects that we invest in and the attitude towards risk and the amount we invest and the approach that we take very carefully balances a desire to achieve the objectives of investors to see significant value created, along with prudent management of the business at its core so that it's able to operate reasonably effectively in whatever market. And right now, obviously, it's a difficult one.
Well, you've referred to the markets right the way through this interview as a backdrop. You and I talk about the markets on a regular basis. We bore people stiff. What do you think of the markets as they are now?
What does any private investor think about the markets right now? I look at the whole cluster of different companies, and I probably have, 20 or so companies in the portfolio, and I would struggle to find a company, I can't think of one now, that I think is fairly valued. We've talked in MiningMaven articles about the fact that the market is not a valuation mechanism for stocks. Anyone who thinks it is needs to really carefully re-examine their approach. It's a place where you buy and sell shares, and the price that you pay and the price you receive is dependent on 1,001 factors, only a few of which are related to the underlying company itself. So economic concerns, whether the vote in Greece has gone the right way, what's happening in Spain, Italy, blah 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 blah, all affects. Now, one thing is absolutely sure, and that's that whilst markets can go down, they can also go up, and the sector that we're talking about, natural resources, is looking increasingly primed for a sensible move to the upside at some point in the future. When that will happen, I don't know. From a contrarian perspective, this is a fantastic opportunity. If you look at the areas that we cover, so gold mining through to base metal operations through to oil and gas, all of those areas have, in my opinion, a bright future. And I think if investors can focus in on the companies with the quality management, with driving a strategy to succeed, and with a sensible business plan in place, then they should do very well over whether 6, 12, 24, I don't know, months. Opportunity abounds at the moment. And what do you think? Well,
I was going to make a comparison between now and 2008. I was actually going to ask you the question because you're the one in the chair, as it were, so we're going to take advantage of that. But I certainly see it very similar to 2008. Perhaps the valuations aren't as low, but the dynamics seem to be the same.
But the valuations are as low in many respects, because you can't think in nominal terms, you have to think in real terms in terms of these companies. And what you've got, in 2008, you had a lot of these companies that hadn't really got very progressed business models. They certainly had a dearth of cash. The markets were shut down to funding, and it was a real nightmare scenario. So you did get potty valuations, but then the companies weren't really that progressed in many cases. Now, with some of the companies that we follow, you've got business models that are far more advanced. They've got projects moving through development phase. You're starting to see some real potential assets there for those companies. Markets are not quite as bad in terms of funding. It's not quite as desperate. It's not fantastic, but there is some money available if companies need it. But the valuations are being crunched right back down. So if you consider the companies then in terms of status and where they were, allow for dilution that's happened along the way, and different companies have different levels of dilution, but consider where they are now and look at the market capitalizations. I think there's a fantastic opportunity for people who have some stoicism about them. Now, if you want to spend all of your days poring over discussion boards and monitoring every single price movement that happens, then you will panic yourself into an early grave. And it's absolutely vital that if you invest in this sector, you do have some stoicism and some focus, because the future almost has to be bright. But when that future brightness will kick in, who can say?
I was actually going to expand on that point, because I think the one thing that I didn't do, and I'm pretty sure you the same, first time round in 2008 was we didn't take things in our stride. We were focusing on developments on a day-to-day basis, and of course, with the benefit of hindsight, you can look back at the state of the markets then and say, I don't know why I worried, because it all came good in the end. It's very hard to do and easy to say.
Yeah, well, you've heard all the old quotes, buy when there's blood on the streets, buy when it feels like you're swallowing cut glass and all the rest. And it is actually very, very true that the moment you feel desperately unhappy about something, you are very much on the cusp of, in many cases, a major recovery. The moment you feel delighted about the stock and you think everything's hunky-dory is when the bad news is just around the corner for whatever reason. So, contrarian-wise, it's the only way to make money, quite frankly, unless you're very fortunate, is to buy when people are simply not buying and sell when everyone is buying. You have to be counterintuitive to this. It's very hard to do, particularly with these small cap stocks. If you just look at these companies, check their assets and see if they've got some meaty assets in place. Have a look at their management team and have a look at their general approach to running their business. And if you pick sensible, well-managed companies, you must be able to do well, because quite frankly, we haven't seen anything like a top in this sector. It's coming. When it will come, I don't know.
Paul, thanks very much for sitting here and talking to us about your new role at ECR and also sharing your views on the market in these challenging times.
Thanks, Malcolm.
We hope you enjoyed listening to this exclusive MiningMaven podcast interview, which is for information and educational purposes only and should not be considered as investment advice or recommendation to buy shares in the company featured. Remember to go to our homepage at www.miningmaven.com to sign up for all our latest updates.